Hello and welcome to BQ Pram. I'm Hiral Daria. Joining us on the show is Mr. Keki Mistry, Vice Chairman and CEO at HDFC. Welcome to the show, Mr. Mistry, and always a pleasure to speak to you. And congratulations for the Q4 numbers as well. If you could highlight more details on the loan growth that we've seen in the different housing segments over Q4, specifically from a low income, mid income, and a luxury housing segment.
All right, so roughly, if you look at it, our average loan size, our average loan amount stands at about 36.20 lakhs in the current year. Last year, our average loan amount was 33.10 lakhs. So from 33.10 lakhs, it has progressed to 36.2 lakhs for new loans. This is all for new loans. So roughly, there is about 8 to 9, roughly a 9% increase in the average loan amount. If we look at loans to customers in the economically weaker section and in the lower income group, in terms of number of customers, it would constitute about 23% of our total customers. So 23% of our total customers are in the economically weaker section or in the lower income group in terms of new loans given in the current year.
Right. So overall, what's the construction finance pipeline looking like for the next couple of quarters from here on?
The construction finance pipeline is good. You must remember that the period from 2017 to 2020 saw some stress in the real estate sector for a variety of reasons we discussed over the years. And as a consequence to that, there were not too many projects which were launched during those 3 years. Now, a construction finance loan, unlike a lease rental discounting loan, results in disbursements being made over a period of time. So the individual, the builder first buys the land, puts in his equity, starts construction, and then only based on construction, usually the disbursements are made. So disbursements tend to be more back-ended than front-ended. Whereas in a lease rental discounting loan, disbursements are front-ended. So because of the back-ended nature of disbursements, and because 2017 to 20 was a period of lull in the real estate sector, resulting in not too many projects being launched, we saw that the project launches started only in 2021, 2022, for which disbursements is happening now, but the periodicity or the increase in disbursements will come over a period of time. So the pipeline is reasonably high.
Right. And overall, what is the kind of non-individual exposure, that has been run down by HDFC in light of the upcoming mergers?
So very roughly, I'm not getting into exact detailed numbers, but roughly it's about 18 odd thousand crores, 18 to 20 odd thousand crores. This is more to be in compliance with the bank's lending norms and the RBI regulations, which to some extent are different from what the NHB regulations permitted us to do. So we run that down. The book has come down by 18 to 20,000 crores. We do not expect too much further need to further run down the book in any significant manner. So hopefully we should start seeing the non-individual loan book also pick up over time.
Right. And how soon does HDFC expect to pare down its stake in HDFC Crudela?
Look, we've got the approval from RBI says that we should bring down our stake to 10% and we should bring it down over a period of years, which we will 100% be compliant with. What RBI also says is that by the time the merger happens, after the merger happens, Crudela should not onboard new customers. So we are in the process of getting a investment banker, look at all the options which are available and all the interested parties. And I can tell you there are many, many interested parties, and evaluating which is the best option for us. Once that is evaluated, we will then go through the process of completing the transaction and bringing down our stake to 10 or below. But if in the process, if there are any regulatory approvals which are required in terms of the other person coming and buying those shares, then we would go back to RBI and say that give us, whilst we will comply within the 2-year period, give us a little more time in terms of being able to onboard new customers. It's a discussion we'll have with RBI at that point of time.
Right. And very lastly, Mr. Mistry, in terms of FY24, how are we looking at growth and what are the segments where you see, growth coming in from?
I think growth will come from all segments of the market. If the monsoons are good, rural economy also picks up, then you would see a fair amount of growth coming from the smaller segments of the smaller towns and cities. The last couple of years, the growth has been a little more in the bigger cities compared to what it used to be. So if the smaller cities also start growing, then obviously the growth momentum will be strong. So my sense is the growth will come from all segments of the market, and the growth opportunities going forward, particularly in the banking structure, are enormous because of the fact that the bank has so many branches which do not distribute housing loans today. But once the merger is completed, all these branches over a period of time are distributing loans. And as far as the last quarter was concerned, March 2023 was the highest level of individual loan disbursements we've done in any month in HDFC's history.
Right. All right, Mr. Mistry. Thank you so much, and looking forward to
Thank
the merger as
you.
well. And congratulations. Stay
Thank you.
safe.
All the best.